Hello everyone. Give me a Y if you could hear my voice clearly. Hope everyone had a great weekend. Great basketball on. Okay, thank you, AB. So something I started looking at last week. You know, we've been in a very long-term downtrend in Aussie Kiwi. Steve went over it last week, you know, consolidation, new low, consolidation, new low, consolidation, new low. But you really can't ignore the divergence happening down here in Aussie Kiwi. And it's not going to take much for a reversal week. Closes over 103.50 will do it. You could see it on multiple time frames here. So you could probably just have a piece here and hope it pulls back towards 280, 290, 103, and risk 50 or so. It actually has some pretty good upside potential when you look at this. Initially, some of these daily moving averages, first one comes in at 430, but you know, it's been such a big break. Why can't we have a rally back to the 107-ish area on the weekly? You see confluence of moving averages here. So, you know, since I run against the wind and I look for turns, this has become a candidate for me. You don't have to agree with me, but everyone see the analysis and why. Probably would have been cleaner if we took out the low of the move here. But, you know, I'm not saying the beginning of a new bull market, but the bears have had their way for a long time, since July. And why not some type of fib or trace? And I think that this might be the week. And this might be the day. Okay. All right, so that's that. I want to take a look at the dollar. Also, crude did begin to perform to the downside Friday. Not as violently as stock indexes. To me, it looks like it topped. I prefer, if I had a chance, to get short higher. I don't know if we're going to attack the wedge line or not, but I think before it's all said and done, we have, you know, 56 is viable, and then under 56, here's your 56, 55 and a half, 56. Then I think you could actually have a test of the low 50s. Some people are even looking for, you know, these lows, big round number to be taken out, but was short last week, covered into the weekend. Some ETF, bearish ETFs, and you know, if energy is just a little bit too much for you, futures are just an ETF that I'll give you an option. It's called DRIP 1043. So here's DRIP on the 4 hour. Basically, you cleaned out it's daily S&P oil and gas exploration. So, you know, we took out this 10 level and flushed everyone. And then when crude started selling off Friday, we got a nice push. So on the last $4 or $5 break in crude, you had a 30% move in DRIP. Okay, so if I'm looking for perhaps twice as much, maybe we get 1.618 of this. So that could be 6.5, could take you back to 16. So, I mean, that'd be a huge trade if you could find a good entry, wrong under last week's low, maybe back to 16. You're talking about 50, 60% type of move over the next several weeks or so. Just wanted to give some people an option over just trading the futures. So that's just one. There's so many ETFs, I can't keep up with them. It's one that one of my mentees directed my attention to. And getting back to the dollar. So we know one thing about the dollar for sure, okay, where it turns bad. After last week, after the Fed, and we talked about this last week, Blake agreed to that, you know, this was the Fed, and, you know, it's kind of obvious, okay, the Fed's very dovish, sell the dollar off, but we've recovered all of what the dollar lost. All the ground the dollar lost on the Fed. So one thing I know for sure, at least as sure as you can be in this business is that under this 95.74 level, the picture is going to change from bullish to at the minimum neutral and the maximum bearish. But I still have to give the upside the benefit of the doubt until that happens. What's going to lead the way? Is it going to be euro? Is it going to be cable? I don't know. So when I don't know and I'm conflicted about EG, which way to go, I feel like bottom picking it, but I don't have enough here. I just go with the dollar index. What's wrong with just trading the dollar index, which is most heavily weighted in the euro? It has lower beta. You really, almost any trade, you could trade the Dixie with 50, 60 point stops instead of, if you want to really be loose swing trader and let your trades breathe, you really at times have to risk at least, 70 to 100 pips in euro and at least that in the pound with all the potential tape bombs. The yen, which was a pretty successful call quite a few times from up here, from here, and then on the this was the BOJ, and see the yen has not recovered much as the dollar has from the Fed. So this was the Fed, and the dollar's gotten all this back, but the yen hasn't. I still don't think it's done. Maybe this is first drive, second drive. Was thinking 940 or so, and depending upon if we really get a risk-off move coming, and I actually thought we'd have some type of relief rally on the fact that the Mueller report came back with pretty clear that there were, saying that there was no collusion or conspiracy. They didn't go that far with obstruction, but it was sure takes the heat off, and S&Ps are still lower. So remain negative on them. We had one drive, two drive, pretty negative week, but I don't like to sell anything in the hole. So I want to see which has more in a recovery relative strength between indexes and oil, and decide which one to go with. And then I want to wrap it with VIX. Okay, so if you pay attention to a lot of different asset classes and instruments, sometimes they give you messages and market tells, because you can tell how it's performing. Is it performing as it should? Is it acting better than it should? And that's a message. So when you look at the VIX here, at this price right here, this was really based upon this little decline that we had, where I thought the market had popped before the blow off last week, right? Or yeah, it was last week. And we're so much further, no, excuse me, it was this, okay? It was this. So this was the high in the VIX, and look how much higher we are above these lows, 2720. We're almost 100 handles above where we were the last time the VIX was at 18. So to me, it's the message is, this one might be real because we're not even at the same price levels and the VIX is. Give me a Y if you understand it. All right, Zig, we don't want to hear about your prostate issues in here, my trading warrior brother. But everyone notice that fact? So I think that adds credence to there is a correction coming, because VIX didn't do that much here, and that was a pretty good, that was 3% decline, and we're way above it, and we're at these levels. So just something to keep in mind. If you think every break is a break to buy right now, it may not be. So the weekend was filled with some pretty exciting hoops. I know ASU didn't, you called it, they didn't do too well, Blake, but man, there were some great games, man. Dude,
I'm sure there was. I didn't watch a whole lot. I was busy doing some other things, so I missed a lot of the games. But I did manage to watch half of the ASU game, then fell asleep because it was horrible. So,
how are you today, buddy?
Good. Just Monday fun day.
Tell that TGIM. That's the first time I heard that.
Yeah, I don't ever say that.
He's an optimistic guy, positive.
Always Stelios, that Stelios guy. You know, just well, first of all, it's been a fairly quiet night, and I have to admit, and I'll say the exact same thing. You know, that you said that it is a. I'm surprised that after the Mueller report, you know, stocks aren't higher. But we also had a pretty weak close in you know, in equities too. But yeah, I'm surprised risk isn't, you know, bouncing a little bit better. And it's not to say that it won't either. We could quite possibly be, you know, higher in risk appetite in a little bit. So you know, you can see the S&P, it's bouncing, and we're coming up to, you know, after we broke this this trend line. We're coming up to probably, you know, I would assume like 2810 here. So I would think that's where we're going. You know, we're going to, you know, challenge some of, you know, this, you know, 2810, 2815. That was the breakdown point. So I'm assuming that's where we go before we try to move lower, I would assume. But you know, that leaves us for some upside. So you got to imagine that the market's probably going to see a little bit of upside here. Looks like the cable's getting a little bit of a lift here too. Hold on,
there's some news on May.
I'm looking.
I don't see it yet.
Looks like there's some Reuters news. Hold on.
Maybe TGIM means thank God it's May. It's not even April.
Amanda saying that the vote might be tomorrow. Third vote might be tomorrow.
Oh, okay. So
I trust her. Oh, there you go. There's some headlines saying that.
And speaking of the cable, so
thank you, Amanda.
Thanks, Amanda. So we could get a nice little, you know, inverted head and shoulder pattern here. You might see the pound rally a little bit. Yeah, a little bit of, you know, spike up. I guess we, you know, spike above this 20 some, and you might get a continuation here. So Tuesday, yeah. So we might get a little bit of a lift in the cable. Let's see. I'm just trying to see if we're gonna break this this resistance here. So yeah, I got to be a little careful, but I still think we're in this this wedge. So we'll see if we can get a little bit of a lift. Anyway, sorry, didn't mean to yawn on you guys.
Maybe one more drive up there if they get some type of resolution.
Well, you know, I think you have to be real careful up here, 134. You know, regardless. Yeah. You know, I think that's probably like
that's a major breakout to you, right? Closes over 34.
Yeah, it is, because if you look at the longer term charts here with the cable, that would be, you know, pretty bullish if we close above 134. It's possible going on to tomorrow. Anyway. But you know, the market has been actually pretty quiet. I still have to, you know, if I think about like the week ahead video, what, you know, I talked about on Sunday, and we did have a false breakout here in the euro. I don't know if I necessarily want to short the euro right now. You can see how we hit the 618 and we're bouncing from it. So I think you got to see how the euro responds back up here towards 114. So I think, you know, up at this level resistance, you got to be a little bit more, you know, careful of what to do with the euro. I hate that we're in such a tight trading range. I'm not really motivated to get too bullish or bearish right now. Obviously, I do think, excuse me, this this false breakout that we had on the end of last week, following the FOMC, I think that this is going to lead us to a breakdown eventually. But I'd rather be a seller of the euro up at 113.80 than do it right here. I mean, we're smack dab in the middle of the range, so I don't see real reason to get too directional at this moment in time. Now, regarding the cable, we were talking about just this inverted, as you can see, this inverted head and shoulder pattern. I'm going to go ahead and remove this just because it's pretty phallic looking. But I think that little break above here, above the 20s, could spike us back towards 133. I think people are probably looking at the vote that's going to happen on Tuesday. The reason why they're going to put forward the vote is if they think that there's a better chance of Theresa May's plan passing. So I think that's why the pound's got a bit of a lift at this moment. Let's take a look at the Aussie. The Aussie's spiking up with risk a little here, and it does look a little better. Now I heard Coach talking about the Aussie New Zealand. I am long the Aussie New Zealand. I own it down here. I've been nibbling on it ever since Friday. So I own it about 103, and it was the chart of the day that I put out, I think Thursday of last week. But anyway, this Aussie New Zealand, I'm really looking for a move above 103.50. I know, or Coach said 103.50. I mean 103.80. 103.80 is where I'm really more focused on the Aussie New Zealand, because I do think if we break out above that level, then we're going to have a pretty good reversal. We do have the RBNZ on Tuesday, so tomorrow we have the RBNZ, and that's important, because if the RBNZ signals at all that they've gone from neutral to dovish, that Aussie New Zealand, I think, is going to recover quite a bit, and I think the risk of a move back up to 104.50 is pretty high. So I am, like I said, I'm trading it to the long side right now. Not too aggressive of a position, but I'm trying to work into a position ahead of the RBNZ. So I'd rather myself have a 30-40 pip gain going into tomorrow than where we're currently at, where I'm only up like maybe 10 pips on my average. So I'm trying to play it to the long side at this moment. Speaking of the New Zealand dollar, so the New Zealand dollar, don't forget, the New Zealand dollar had a false breakout last week here above the triangle. I do think this is going to eventually lead to downside. I do believe that we're eventually going to fail up here. Now, do you short the Kiwi here? Maybe if you can get a move above 69 cents, that might be a better place, a better location, and be on the short side, I would think. But that's something that we should keep in mind. Now, the dollar Canadian, I like the dollar Canadian. I think it looks very bullish. Had a nice reaction off this inverted head and shoulder pattern neckline. I've been playing it to the long side. I was so bummed out when I got stopped out literally at the low here, and I know I explained this on Friday, but I've been trying to chip back with it. Even on Friday I played it on the long side, and now we're challenging this downtrend line, and I think a break above 134.50 is going to be pretty bullish. If you are short the dollar Canadian, the one thing that you have to take into account is how well it's holding up. I mean, the dollar Canadian is holding up so well, and if you are short, you have to be cognizant that if we break above 134.50, I don't think you want to be on the short side anymore. US dollar Mexican peso, I love the move back above 19. This has squeezed out a lot of shorts here already, and I think the risk of further upside is high. We've talked about the emerging market currencies and how the emerging market currencies could respond very poorly if we have some risk aversion. So if stocks continue to go down, whether you're talking about the peso, the peso, the Turkish lira, or the South African rand, which here's the rand here. These could be extremely bullish breakouts. Like here's a great example of the South African rand. We had a descending wedge, and we're already breaking through the upside of that descending wedge. So I think if you get above here, and you can actually just put an alarm here. we get a breakout above there, and then that's going to be a very bullish bullish move in the South African rand, and that might actually cue you into being long the dollar mex if that does happen. Swissy, not really doing a whole lot with the Swissy. We're just hovering around the mid range of this triangle. It's just kind of sitting there. U.S. dollar, Norwegian krona. I probably should let Stelios talk a little bit about Norway. Hey, Stelios, are you here?
I am here. Hello.
Hey, how's it going? So
very good, thank you.
So tell me what your thoughts about the krona is at this point.
Well, my thoughts on the krona are unchanged. So. Okay. I've always thought, well, for a while now, but it's been getting a little bit more firm recently that Norway's fundamentals are still very strong. Inflation is way above the 2% target. I think last print was 3.3 or 3.4%, and it's been staying up there for quite some time. The problem that so talking about Norway's fundamentals, we all know that oil greatly affects its economy because 20% of its exports is oil, so we have to watch oil price. But having said that, it's been Norway's a country that's very well run, consistently running surpluses, has the biggest sovereign wealth fund in the world, $1 trillion. Everything's going for it. The only problem it's had, as I said before, is oil, so it depends on oil price, and also the central bank has been quite conservative. They've always been conservative. So, other central banks, if the Fed had that inflation, they would be hiking 50 base points at the time. They have been hiking very, very, very slowly. So that's the only problem I see. And in the last meeting where they hiked last week, they actually were a little bit more hawkish than expected. So that shows that they are a bit more eager to normalize rates, which they know will give them some ammunition to actually cut when they need to, because we know that the global economy is showing signs that it's turning lower, and most central banks want to have something that they can do about it. So that's why I still like the krona. Yeah.
So this week we have retail sales on Friday. We have unemployment data on Wednesday. Do you think that some of this data may move the needle as far as Norway goes, or is Norway going to just go by the way of crude oil and the dollar?
I don't think that data is going to be that much. That it's going to affect things that much. I mean, the main number that everybody looks at is inflation for Norway. So that's what happens. Obviously, dollar Norway, the dollar is a huge part of it. As the dollar rallies, this pair is going to rally. But we've seen recently with the dollar being relatively strong. Well, not strong, but it's not really collapsing or anything. And the USD NOK has been dropping. So the krona has been outperforming. I still do think it's going to go lower, dollar Norway, but obviously we are U.S. news are going to greatly affect this pair for sure.
Yeah, one of the tailwinds that you might have is crude. I mean, crude looks bullish, but it's really it hasn't been able to capitalize on this move above $55, and I would be more concerned if I traded the Norwegian krona. Well, if I was in it, I do trade it, but if I was in a trade right now, I'd be more worried that that crude hasn't really capitalized on this breakout. I mean, we are higher, but not substantially higher. I would have thought that crude oil would have been at least at the 200-day moving average by now. So
yeah,
I think
that can be headwind. You're right.
Yeah,
yes.
it could be if crude starts to come down. All right. Well, thanks for your thoughts. Are you still trying to run a Norwegian krona bullish trade right now?
Well, I do have long krona versus the dollar. I only have half of the position. I took some profits last week after the interest rate decision. I still have the pattern in play, and I'm running that. And I'm also short Euro Norway, so I'm long krona against the euro as well. And I'm keeping those two. I think they have potential.
Still, I have a question. What happened to this instrument when crude broke $4 before the recent move to new highs? We had that $4 pullback in crude about 3 weeks ago before it came back.
Yeah, I mean the thing is, in the recent months, oil affects the price of Norwegian krona, but not that much. You know, we had the huge. Let me find it on the chart. Actually, hold on. So we had in late 2018, we had oil going from $54 to about 43, and dollar Norway actually. Hold on, let me just find it. 1 second. So yeah, so basically, there are moves where oil moves and the krona just doesn't do anything. So we've seen this happening both on the downside and on the upside. I mean, if you put a correlation to them, they are correlated. But there are small moves like $1, $2, $3, $5, $6 that can the oil can move, but the krona can move very, very little compared
not
to.
Not as sensitive to it as Canada.
You could say that. I think the krona is sensitive to all moves when it's a big impulsive move, like the one in 2018. When was it?
When we went down, crashed from 70 to wherever.
Yes. So that can happen, but a few dollars here and there. I don't think that such short-term moves affect it that much. But as I said before, if you put a correlation to them, they are correlated, of course.
Okay.
Well, thanks, Stelios. Okay, well, I'm going to bring in Steve, and I thought I'd ask Steve really quick as I'm switching over with him.
Here today, Blake.
Oh, he's not.
It's going to be Gregor with us, yeah.
Oh, okay. I didn't know he was out. Where's Steve?
He's somewhere on holidays. It's a holiday today in Greece, so there's no school, there's no work or anything. So he's. So why am I working?
Why are you working? He's and if anybody ever says that you Greeks don't work, then but I didn't know Gregor was going to be here today. Well, that's a really big really big benefit for those of you guys that are listening in. You get Gregor Horvat today. He's going to be able to talk about some of these Elliott wave patterns that are developing in the FX market. That's awesome. Well, let's really quick. So let's talk about the dollar index. The dollar index has had a nice bounce. We're stalling at the 50% retracement. You can see this. This is like it was a big support zone. It's a big resistance zone. It's just a big zone, and it happens to be right in the middle of, well, it's also the 50% retracement, but also right in the middle of the dollar index in this what's currently viewed as the bullish wedge. And I'm wondering if the dollar is going to break out of this wedge anytime in the near future. It's going to be interesting to hear what Gregor's thoughts are on the dollar index moving forward. So that's another thing that I'm gonna want to hear. Now, really quick before I pass it back over to Coach and Greg, I'm not sure if Greg is even here yet. Let's talk about the dollar yen. So the dollar yen, we broke down in the dollar yen. We stalled at the 618 retracement. Okay, now the bounce off the 618 has stalled ahead of 110.30, and this is one of those levels that I think that if you are bullish the dollar yen, you've got to be a little careful here, because this is like it was the 50% retracement. It held on the way down. It's actually stalling the advance on the way up. So 110.30 is going to be a pretty big deal for bulls. If you are if you're a stock market bull and you feel that stocks are going to recover today, then this is the level that you really want to see broken in the dollar yen. But what you'll notice is all these other yen pairs, like the euro yen, bounced off support. We are bouncing, and probably very similar to the dollar yen here. Let me get rid of that. The euro yen, whoops, up towards this 125 level. This is probably going to be the bigger resistance for the pair as we get up towards up 125. That's going to be a big deal. And then let's take a look at the pound yen is challenging the underside of this trend line here. I think you can draw like that. I don't even deal with the guppy right now, because the pound, wow, look at the cable. It is really spiking here. Look at that. Nice move up in the cable. I was thinking we were going to break that 20 level, but we really did spike above there. And this is one of the reasons. Yeah.
Sorry to interrupt. I think probably the reason behind this rally is that the market thinks that, look, if May is going to go for a third vote, she must know that it has a good chance of passing, right? So otherwise, she probably wouldn't do it. But
right,
then
that's
again,
what I was saying. That's what I was saying earlier. It's like if she's bringing forward this vote, then she's got to have, pretty big, pretty confident that it's going to play out.
Well, 3 drives to a vote.
There you go.
Beats everything, huh? What do you think?
Yeah.
Anyway,
all right.
One trick pony, guys. You
are, Dale. You are. So I was just going to point out that, like, the ASEAN, we really managed to bounce pretty aggressively off of this, what I would call channel support here. We are at the 38% retrace, and you can see a lot of these pairs. Here's the Kiwi Yen. Kiwi Yen is going to come right up to previous support, current resistance, going around the 76 yen level. I am still short New Zealand yen. I just been shorting a pretty core. I have a core size position, and I've been covering it on dips and selling rallies, and I'll probably be adding a little bit up here ahead of the RBNZ going into this next week, or into this week. So let me see here. I think I'm going to pass it over to, is Grega here?
Let's see. Oh, he needs 2 minutes, he said.
Oh, he needs 2 minutes. Okay, sounds good. All right, so he'll be here in just a couple of minutes. Sounds great. He's probably just setting up his charts. Let's take a look at a couple of other things. I talked a little bit about the Aussie, New Zealand, but I really want to see, like Dale, I want to see a move above 103.50 and really 103.80. And I guess we should probably look at some of these. We got silver. Let's go take a look at gold, actually. This is a nice little up channel, okay, in gold and silver. Gold is approaching the 618 retracement. You can see it right there.
Again.
Whoops. There we go. And here is silver. Nice little up channel as well. The 50% retracement has been
containing it so far.
Yes, thanks. I was trying to draw that little rectangle there. But you can see the 50% retracement has been capping it. Now, one of the other things, and Stelios, are you still here?
Of course I am.
So we have a lot of talk about the yield curve inversion, and that's, have you read a lot about how the market is very concerned about the yield curve inversion?
Yes, this is something that the market looks at for decades now. They look at, and because the yield curve, when it inverts, it usually shows that a recession is coming. So this is very important, and also because the banking sector, as we know, is a huge part of a country's economy, especially the US. When the yield curve is inverted, the banks cannot make money. Not from the traditional borrowing and lending, because banks borrow at certain rates, they lend at certain rates. If the yield curve is not inverted, this nice upward sloping, they have a nice juice to play with, but with a flat curve they can't do much.
And that's when those lower term bond yields start inverting, meaning that they're catching up to some of the longer term rates.
Exactly, and I think from what I remember, I think 1 month, like 3 months in dollars is higher yield than the 10 years, right, or something like that.
Something like that, yeah. So and that now is becoming a big concern of the market. So exactly. So keep an eye on what's happening in the bond market. I think it is definitely worth noting. Hey, Grega, how you doing?
Hey, I'm fine. Thank you.
Hey, thanks for coming on. I know, I didn't know Steve was out today, but I did just find out that you're here, and I know that everybody's going to be pretty excited to get your wave reviews on some of these majors. So what do you got cooking over there?
Yeah, I mean, I'm watching this cable. It's very interesting about this Brexit, and I'm not sure if you covered this, but this wedge is really looking interesting. Probably for the month of April, I think it could be pretty nice reversal to the downside, actually.
You know, I was just looking at the ascending wedge, and the one thing that worries me a little bit is if we get a close above like 134, and we get a close above 134, I don't think I want to be on the short side. However, I've been looking at the exact same wedge as you, and but you know, there's some positive news right now, and Theresa May is bringing forth her third substantial vote. Is that what they're calling it, Stelios? A substantial vote?
It's the meaningful vote.
Meaningful.
Come on, Blake.
What do they call substantial? It is a substantial vote, meaningful vote. Sorry, and so you know, I think that is getting the bears a little nervous, but no, I was looking at the same wedge, Grega. So what do you see there as far as a wave count goes?
Yes, actually, what I'm looking at is still this flat correction. So 3 waves up for a wave A. Then we got a very slow overlapping decline for a wave B to a new low, and then we reversed quite aggressively. However, in this, why I think that we may see a reversal to the downside is because we can still see pound strength at the moment, but notice that current rise is much slower compared to the first part of recovery. So in my opinion, this still ongoing recovery is losing strength, and I think that when volume will pick up, that actually we may see a very strong move in the opposite direction based on these Elliott wave cycles. So also we have potential, like I said, wedge or ending diagonal formation. It's a 3-3-5 pattern, which means that each leg in this pattern should be made 3 waves. Even here in wave 1, we had this 3-wave structure. Okay, so what I see here is that actually this recent decline that we have seen was only another pullback wave 4. So actually, to give you the whole perspective, this was wave 1, first leg, wave 2 pullback, then we got wave 3, wave 4 pullback, and now of course I'm also expecting another 3-wave rise here for wave 5.
I like that, Grega. You know what? And Blake was talking about a 134 breakout, and Blake, you know, a lot of people are going to interpret that. So what that's going to do is get a lot of people long up there near Grega's completion of the wave, and a lot of people wrong-footed should this count work out.
Yes, I mean,
I love it.
It's really important what Blake said, that one daily close above 1.34. So maybe we get just a spike and then a reverse lower. Also, we should pay attention to the weekly close as well once we are at those levels.
Great point. How it finishes the week. Yeah.
Yes, exactly. So because obviously when this will happen, when Brexit will, we will know more about Brexit. I'm sure that whole week will be volatile, not just one day. Okay. So I'm sure that this zone will be very interesting to watch, and what I think that we may actually see here another push to the upside is, as I said, let me zoom this in, is we had only 3 waves of decline, and notice that current rise is in 5 waves from this area, and also there was quite a deep overlap with the previous wave A. So for me, this was only a corrective decline, which means that bigger trend, uptrend is still intact, and that actually this 5th wave is ongoing towards the upper trend of this wedge or ending diagonal. So for now, for me, I mean, it's definitely too soon to look for shorts, but too high to look for any longs here, despite a very good structure on the intraday chart. But because of a lot of noise and unclear situation here around Brexit, anything can happen with pound. So technically speaking, I'm just waiting on these upper resistance levels to be triggered, and then I will potentially look for selling opportunities once I will have enough of evidence that this ending diagonal was actually the case and it's finished. So I'm quite patient here, but if we'll see a reversal down from the upper side, then definitely I would be very interested for short.
Oh, okay, has the picture changed? I remember last week on Euro, Grega, you were looking for a dip, which we had after getting above 114 that you were looking to buy, but is that
yes,
still in?
I mean, I was looking for a free wave drop, if you recall, because of this waves up. And so far, I mean, we have quite nice free wave setback here on our into very interesting levels here. It was a 61.8%. So here you see the 61.8%, and also wave C was equal to wave A in that area. And now we are trying to pick up very slowly here. So I'm quite patient still, because what I didn't like on Friday is that we have seen a very strong drop in price into the weekend, right? So I don't want to be buyer when you see a very bearish weekly close. I will be more patient, and I want to see how these supports will actually hold or will be broken at the start of next week. So we are now at this time, and if we will see a recovery back above 1.1317, then probably I will look for longs here on euro dollar, because this picture is still quite clear. 5 waves up, 3 wave setback into 61.8%. So as I said, if we'll see more upside price action, why I need more upside price action? Because then I will probably label this as a completed 3 wave decline. So in such case, wave C or even wave 3 could be in the cards on the upside. Okay. If from any reason, based on alternate view, we will just continue to break these lows from Friday and then continue even lower, then of course we will have to adjust the views, but still I would be very careful at the new lows, because for me that's still a very strong reversal pattern which may actually send the euro dollar higher, either from here or from another low. But the intraday price action, let's say for the next 24 hours, will probably tell me a lot if we already bottomed or not.
Okay, so whereabout is that count 2 low near that ending diagonal, 111-ish?
Yes, exactly. It's also very nice round figure, and also what I see right now here is this old swing low right there.
Okay, thank you, Grega.
Yes, around there. So still, euro dollar, I mean, I'm expecting a bounce here. I think that really much higher degree recovery could occur before we may resume this longer term downtrend that is intact already since 2008.
Okay. So what's next on the docket, as I said?
Actually, I will take a look at 10-year US notes. We discussed about the year.
We did. Remember.
Yes. Yep. So.
And I remember asking you if, this one last drop in yields was going to be commensurate with a drop in US dollar yen, and you said yes, good call.
Yes, dollar yen moved very nicely to the downside with these what yields are doing, but now still we haven't seen any bounce on yields yet. As you can see, they're still just drifting lower. But what I see on nodes, okay, here I have nodes, is that actually we are here in a 5th wave. Okay, clear wave 1, flat for a wave 2 here. Then you have a wave 3, wave 4, and now we are in wave 5, moving into some nice steep resistance here. So I think that the reversal to the downside could occur here. We have also our divergence here on a MACD, quite a strong one. So I would not be surprised if we see limited upside and starting to move to the south. And of course, at the same time, then yields will rise, and this S&P 500 could actually complete this pullback once this happens. So general view, I mean, still technically speaking, I remain on the same track here. I will be looking for more upside on stocks after a completed correction, after current correction is completed, and also will anticipate more weakness on gold as well. Okay, so if I take a look on the S&P 500 here, and then we will go to dollar yen. So the S&P 500 looks like that this can be a completed 5-wave rise. Okay, but what is really important is this drop from last week. It's a very sharp, and on the hourly chart, I will show you. Actually, it's a 30-minute chart here. is, you can see a clear 5-wave fall with 1, 2, extended wave 3, wave 4, and wave 5. So it looks like that we are now just moving a temporary making a temporary corrective recovery. This is the first resistance here at 28.20, probably the most important one.
Okay, so you're looking for a quality on the next drop, where a C equals A of this ABC, or maybe fib extension, maybe.
Yes, I mean extension should be considered if we respect that always when a higher degree correction is unfolding, we may retrace back to the area of a forming wave 4, and this was at 27.20. So if we consider that this could be a wave B bounce, as I said, 28.20, then of course equality level would be around 27.60, but the most important support based on this technical perspective would be at 27.20 level.
Would love to see him flush out the stops under 27.20, maybe go to 680 or so and then turn, but that's just, is that possible?
Yes, of course it's possible, very possible. I mean, I'm just wondering, until we complete this corrective setback, how dollar yen and other yen crosses will actually
me too, because
much deeper pullback there. That's why I'm a little bit concerned and not so confident in the dollar yen upside just yet from here.
I hear you. You know what else? Okay, go ahead and give the dollar yen, and then I have a question. Go ahead, buddy.
Yeah, sure. But so far we have a very nice free wave drop right into this old swing high support, and also this was this area that we trade right now was also this gap, as you can see here from start of January. It was
during the flash crash.
Yes, exactly. This where it began, and now we are trading back into this area.
You eagle eye, you.
Yeah.
I didn't even notice it. Yeah, nice.
And notice here was a gap. Then we also came back to this area, reversed down again. Then we finally broke higher, and now we are again down there. And if we take a look also on the hourly chart, you can see that we have potentially completed 5 waves decline into this wave C. Okay, but of course, calling a low here and putting in longs, I mean, it's definitely too soon for me. But if we're starting to building more upside here towards these former wave 4 levels, then of course this would signal that we are going even higher. If not, if let's assume that S&P 500 moves much lower and dollar yen trades with it, okay, then probably this decline that we are tracking as an ABC would, in a way, would be just becoming even more complex.
Okay. Great look. So I want to ask you about the S&P Siamese twin, which is crude oil. Has your view changed? I know you thought there was potential for 62. Did last week's action change it?
Actually, I'm still looking for more upside. As I said, 62, maybe even 64. It's where the 61.8% is right now, and also here's an updated count. My primary outlook suggests that this was the first leg, wave A, then we got a wave B pullback, and now we are unfolding potential 5-wave rise for a wave C, which could be even an ending diagonal. But the first or 2 resistance levels that I would pay attention on would be based on this 4-hour outlook would be around $60. After this, another pullback, and then 64, as I said, based on which also comes in play on this higher time frame.
Okay, what would change that count? A break of wave 4, Grega? What is it? 57-ish would change the count.
7, yes. I mean, this is a trend line, as you can see, connected from starting point of this ending diagonal and end point of a wave 2. So as long as we are above this trend line, I think that this is still a valid wave count.
Okay.
But if we are going below 56, then I would probably be looking for other possibilities.
Okay, 56 is a line in the sand then. Okay.
Yes.
Thank you, buddy. We're getting some requests for, I think you just showed, or at least mentioned the gold. You want to get into it a little bit here?
Yeah, sure. So gold is on the rise, but still, I mean, this is still seen as an overlapping activity. you will probably see a lot more overlaps within current rise than in the previous decline. So based on this approach, this should be an impulse, this should be a correction. We are at 61.8%, and as you know me, we probably, I don't trust Mondo's flows too much, so I would not be surprised if we see just a temporary push to the upside. Let's see, maybe 61.8%, or maybe even this upper side of the trading channel to be retested and then a reversal lower. But probably based on timing, in the second part of this week, we definitely should see gold weakness coming in. I mean, if we take a look at silver probably is even better. I mean, look at this very strong decline out of the wedge, and now we are just moving to the upside very slowly. So probably
it's underperforming gold, definitely.
Yes. Yeah. So I mean, and this one suggests the same actually, right? That we'll see move or a reversal lower, but from slightly higher prices. So maybe gold is still making this complex corrective price. But in both cases, I think that these two may see limited upside.
Okay.
Eventually a drop should resume, if on the right track, in April.
Okay, 1534 is the line in the sand for that, and okay, nice look. Okay, so for selfish reasons, I'm smelling a potential, at least short-term bottom in Aussie Kiwi. So I was wondering if there was anything you saw wave count wise to tell me I'm real premature on that.
On Aussie Kiwi?
Because that's usually what if I have one of my problems is being early. So I'm wondering what you're thinking here.
I mean, this always when I trade, I definitely trade away from those spikes. I mean, this is probably you're looking for something similar, I assume, because this spike, I mean, definitely suggests that either we stay sideways or even we will turn higher into higher degree correction. And if we respect this current decline, I really think that this is having a characteristics of a free wave drop. So if I just try to elaborate really quick here.
Yeah, and it's really grinding down the last few weeks, Greg, and I have all kinds of divergences on multiple time frames down here. So there could still be one more flush. Okay.
Okay. Now this is a really nice pattern actually.
Okay. Oh, okay. Thanks for moving the blue line for me. It relieves the pressure. Thank you, man.
I mean,
whether it's right or not, I appreciate you moving that blue line.
Because, as you know, I always have these blue lines to try to illustrate where the market will move on each of my charts.
Right.
And if I don't have it, then I always get questions from clients. Where we go? Where's the blue line?
Yeah, because they already have positions and they want some added confidence with what they're doing. So I understand why.
It's easier for them to read, especially if they are not familiar with the Elliott wave principle.
So this could be an ending diagonal down here. It's a falling wedge to me. Is it an ending diagonal?
Yes, exactly. I would watch out for 103.70 as a for a reversal. That will be the first swing high, very important one that would be taken out then within this ongoing wave series. So of course, bottom formation could then be in. So, but also at the same time, I would watch out Aussie. Probably they will. Maybe Aussie has to complete this complex correction that I'm tracking before this Aussie Kiwi may recover as well. But so far, I really cannot say that this correction is already finished here at March 08 levels. I mean, because this rise, as you can see here, this rise is not
it
really
failed. No follow through after the Fed. It spiked
yeah.
on the Fed, and that was it. So, still perhaps price action under the big round number of 70, maybe even 69.
Yes.
And let me ask you this: when we get down there, is it potentially, a wave 2 on a bigger picture Aussie, and that there could be okay. All right, C maybe a C.
You mean to see a break to the upside into wave 3?
Yeah.
Based on what gold is doing, based on big picture on gold,
okay.
and based on dollar index, where I see just in a big flat formation right now, and we'll be expecting a resumption higher, I really think that even here we will see only a temporary rise as a free wave rally.
Okay. Well, we have time for one more. How about Euro Aussie, Greg? I'm feeding you questions from our attendees. So
yeah, sure. Let me just think.
Then we have Victor Zubarev with us.
Okay. I mean, Euro Aussie. This one is very clear. Okay.
Yeah.
Firstly, we probably have seen a completed 5-wave rise up from 2017 lows. What I like the most is probably this spike that took us above these 2015 lows before we reversed to the downside, and this reversal was clearly very strong. I believe it was an impulse, and here we are now in a very complex correction. I just don't want to talk too much about this because it's not easy for those who are not familiar with Daily Wave to understand it. But what is really important is that this was a very strong decline, okay, and that this is a very slow rise. So I think that the next strong move will again occur, but into the same direction like the previous one, which was to the downside. Also, as I said earlier, always when a 5-wave move is completed, expect a reversal to occur back to the area of a former wave or towards the termination point of that level, and this was of that wave, and this was at 1.5340.
That's great mentoring, Grega, for people that feel overwhelmed by Elliott, for you to simplify it in terms with velocity. So the strongest velocity in any direction is usually the primary trend, where if you just chop around and it's a slow move, it's usually a correction in time rather than price, which is counter, just a car going 5 miles an hour or a car going 60, or if Steve's driving 120. So, yeah, that's a great way for people to, without a deep understanding of Elliott, just see how fast things get from point A to point B, and that's going to give you a big edge on direction, correct?
Yeah, exactly. So about the Elliott wave, it's not really that complicated, but the problem is that people
complicated.
Yes, exactly. So I mean, always when I look at or just want to look at some stocks or any market, what I do is just this. I will just grab this one market, no matter which. I will pull it out, and I will immediately see the structure. Of course, obviously on a longer time frame, and I will immediately recognize the structure if we are in uptrend or downtrend. But then, when will have a very clear evidence that we are in a clear direction, either to the upside or to the downside, then I will go to the smaller time frame and try to recognize the corrective setbacks. So it can be really simple actually to recognize the Elliott wave model, but just you have to know what is the clear pattern and what is the complex pattern. Just if you don't recognize the clear pattern as soon as you open the chart, then obviously the pattern is not clear. So go away and look for look for the patterns or potential trades on some other markets where you have a clear wave structure.
What do you think of this, Grega? I knew guys from the floor in Chicago that never left one pit, and they did fine. What do you say to people that, I know I lose my focus if I'm following or trading too many instruments. Do you have that ability to, grasp a whole universe of different markets? What do you say to that? People are better off maybe concentrating on 3 rather than 20.
Yes. So the important is that I have everything on my radar screen, but to pay attention I really pay attention just a few of them, as I said earlier, to those that have a clear pattern. So for me, as a trader, I want to be everywhere because the opportunities, maybe next wave 3 will occur maybe on this market, for example, right here. So I mean, and this is the example. I mean, I'm not really sure when it was the last time that I looked at this market, but it's very clear to me. Okay, it's an uptrend clearly. You go to the daily. What I see here, a 3-wave setback. What I see on the 4-hour is a 5-wave rise. Okay, an impulse up. So I think this is a correction, and the next leg will be to the upside. And that's the key about the Elliott wave. Just don't complicate. Try to use the Elliott wave tool on those markets that are very clear. Just scan any markets you want, and you will immediately see what is clear pattern on which market and where is not.
Right. Clear is a potential trade. Unclear is leave it alone, no trade until it clarifies. So, you know, great mentoring and analysis. Again, Grega, thanks for dropping by and answering some of my selfish questions for my own purpose, but I'm sure other people are following them, and really appreciate you being an integral part of the team. You are definitely a big part of my intelligence gathering every day. So thank you, Grega Horvat. Follow Grega on Twitter at Grega Horvat. And if you like Grega's analysis, you could sign up at his website, and he shares all his stuff here. You could sign up here and get Grega's short-term, long-term patterns in play. He's our Elliott Wave specialist, and we're fortunate to have a practitioner like Grega. So consider joining our service. Grega, good hunting this week, buddy. And okay, and I'll see you at the meeting later.
You enjoy.
All right, Grega Horvat, everybody. Thank you. Hi, Victor. So here we go. I'm looking forward to talking to you. I'm going to make you the presenter, and it's been a while. So welcome back to Face, Victor.
Thank you very much.
I heard you for a second.
All right. I'm gonna raise my volume a little bit. Make sure.
Okay. You're good. You're loud and clear.
Real good. Hey, I enjoyed that interview you had with Grega. You know, I used to. I think one of the first things I ever really wanted to study when I got into technical analysis on a serious basis was Elliott Wave, and I bought Prechter's book where he put together kind of like a biography on R.N. Elliott.
Yeah.
And on the first page, I freaked out because it said that R.N. Elliott was born on the same day I was, which was July 28th.
Wow.
And there's another person that I love a lot, and you probably have interviewed him already, Larry Pesavento.
Oh, yeah, Larry's Larry the Legend.
Larry the Legend, he's great. His books on astro trading are tremendous. And he also is born on the 28th of July.
So all you guys, and you know what? That's 3. So yeah, that's completion there. You and Larry and R.N. Elliott. What a great service you guys would have if we could bring back R.N. Let me ask you something, Victor.
Sure.
Is it true? I mean, people try and downgrade R.N. Elliott and say he died penniless. Is that a true fact, or is that just people, the haters?
Are you referring to Elliott or Gann? Because there's
R.N. Elliott. R.N. Elliott.
I'm not quite sure. I know he got very sick. I think he had like colitis or cancer or something. He got very sick.
Yeah.
But I'm not sure if he died penniless. But I never really had access to information about whether he made money doing this or he just made money writing a newsletter.
Okay, yeah, because there are some people that are like that. It brings to mind that guy who wrote a newsletter out of La Jolla for many years. Do you know who I'm talking about? Very famous guy, wrote a letter for 40 years. Can't think of it. Huh?
Joseph Granville?
No, this guy was out of La Jolla. Anyway, enough of that.
Okay.
All right. So I know you have some things you want to talk about, but I want to talk about something and
Sure,
get your view on it. We recently had a contest about trading setups, and right now we're looking at your page with a lot of different pictures. But people having kind of a spaceship set up with lots of screens and everything. Do you think that Gann, who did everything by hand, would have liked to have this, or it was what made the masters, the fact that you couldn't be lazy, and NLP says that it has more impact on your brain when you write something down than if you just look at it. What do you think? You think they would have liked the modern style of trading, or what made them masters was they had to, set up their own graph paper and, drawing things on, freehand? What do you think?
I think that drawing freehand on graph paper is very important, and I think Gann would have said the same thing. Because I know people that will graph Gann lines, angles, and levels on paper only. They have a feel for the market. They say that the market feels different to them when they graph it on paper from day to day. So, but I would also think that if Gann was so advanced with his techniques that he would have embraced having 2 or 3 screens. Now, I only have 3 screens, just so you know. I don't have a big, command center setup like my son does, where he has like six screens doing his stuff. I'm happy with 3 screens.
Yeah, I work with 2. So, I needed a little extra real estate anyway to put some things up there. But so, what's on your radar lately here, Victor? I know you wanted me to ask you about McWhitter.
Yeah.
Maybe we can
let me just start here by paying homage to my granddaughter, Hallie, and I'm going to put up a picture for you because I just wanted to, this was a big deal with me. I thought it was a cute picture I took of her. Hallie, she'll be 2 years old in September, and there she is looking at a candlestick pattern that we call the Three Rivers Evening Star. So that was my opening statement there.
Oh, okay. Is that a book you wrote that she's looking at?
No, I'm just making that up. That was a big joke. I put that on. I put that on Twitter, and I looked at a pattern, and I thought the Three Rivers Evening Star was an interesting pattern. So.
Okay, so I mean, what you've come up with, Victor, is you're kind of, would you call it a blend of everything you've learned as a scholar of all these guys? I mean, you come up with people that I don't even or haven't heard of. Like, for example, you brought up McWhirter. I mean, I've never heard of McWhirter. So, go ahead.
I agree. I come up with my style is a combination of a number of things, and I don't want people to think that I'm all about. I'm not.
You know what? The guy I was thinking about, someone in the attendees, Mal said it was Richard Russell. So
I remember Richard Russell.
And he had a very famous letter for 40 years, and
yes, he did.
There again was I believe an example. His wife said that he never really was successful in the market, but you know what? I know a lot of people were successful following his work. So some people can analyze and give great advice, but when it comes down to the pressure and the heat of being in the market with money on the line, they don't have the paradigm to do it. But it doesn't discount their analytical skills, does it?
No, it doesn't, because I think that some of the best trading books I've ever read were written by actual traders, not economists or people who studied the markets, and never had the experience of trading. So I'm like you. My background professionally was in the brokerage field, between being a stockbroker, being a compliance officer, worked in the back room office.
You know what I call compliance, Victor?
Yes.
My trading warrior brother?
Yes.
pus control. That must have been a fun job. Look, Mr. Jones. You know, that's a margin clerk I'm thinking of. But go ahead.
Yeah. Well, I've got to tell you a story. Then I'm going to be real quick because I want to show you a bunch of stuff here.
Okay.
When I worked in Chicago for Oppenheimer and Company as a stockbroker, I got hired out by a headhunter because before that I worked for Dean Widow Reynolds in their stores, you know, the Sears stores concept.
Oh yeah, I worked for them on the floor. Yeah, I bought a washing machine and a share of IBM.
Right. So I got hired out to work for as a broker at Oppenheimer and Company, and there was a guy that sat across the aisle from me, and he was really the hottest thing under the sun. When they brought him in, everybody said he was from the old Drexel Burnham Lambert office, and they went under. So he came over.
Well, that was Michael Milken's home.
Michael Milken's home.
All right, go ahead.
So so my manager, who always would look at me straight in the face and thinking that I wouldn't notice, he would always reach down to the middle of his desk and open up the side drawer and turn on the tape recorder and pretend like as if he wasn't, you know, getting caught in the act. Well, anyway, he told me that I need to pattern myself the way Russell operates, and it'll be my job to keep him on this side of the law. That was his exact quote. I'll never forget it. And what he didn't know was that I sat right next to Russell, and I knew exactly what he was up to, because what he would do in the morning, he would have his Dun & Bradstreet business cards. He would call CEOs and presidents of medium-sized companies in New York in the morning. Then he would call them in Chicago at lunchtime.
Right.
And then he would call them at night in LA. And he used to do this trickery where he would try to get past the screener, which usually is a secretary.
Yes.
And he would only use his first name. And he said, tell him Russell is calling. And they would think it was a friend or something. He'd get him on the phone. But he would say stuff like this, which he never even met the guy before. He would say, remember when I told you that Qualcomm went up 20 points last week? Well, here I am again. Well, he opened up fake accounts, and they fired him. And he got so upset, he crushed the front door of the office, and he threatened the manager. And we had people that were security in our front lobby for about a week. So that's a great story for you now.
Okay. So what are you seeing here in different markets right now, Victor, or you know, some of your work? You recently tweeted some type of pattern that would imply a potential triple top in SPX.
Yes. Okay.
Go ahead.
Yeah, let me go to that screen. Okay, if you can see that.
Yes, we got it.
Okay. There's a in this particular case, there was a mini triple top on 12.3. If you see that, the third top was the yellow. Okay, that happens quite a lot. So pay attention to that, everybody. You can see mini triple tops within a larger swing, because the swing from 924 down to the December 26th low was the major swing. Right now, I'm going to change the screen because I want to talk about how to correctly draw a
GAN line, GAN angles,
GAN one by one. The big thing for me is that a lot of the services that you can get for free have the GAN fans, but you have to be aware that when you draw the GAN fan and just put it on a chart, it's not going to correctly draw the most important line, which is the one by one, which is the one that I have here.
Why don't they include that? If it's
I don't know. I think it has to do with the mechanics of figuring it out ahead of time based on the size of the chart. And so what I have found out is that if you take the low, in this case, I'm going to change the screen and show you what I mean.
Okay. Because these lines are not only meant to project potential price points, they're also projecting time of the time where a market might get to a certain point for a turning point, correct?
You're exactly right, because here's a close-up of that chart I just showed you. Now that bottom low there, that's the December 26th low, I believe, and that's the E-minis, and that low is 2316. So what I do is I take that number 2316 and I reduce it by a factor of 10. So now I'm using 231.6, and I have to get the square root of that number. Now, when I do the square root of 231.6, I get the value of 15.218. That tells me I need to go over 15 trading days. As you can see there, right above there, it says 10 bars, 15 days. So I'm sorry, 15 calendar days.
Okay.
Now, to get the correct pricing where that angle meets the 15 days.
I was saying that we should have 15, this trend or this move has a lifespan of 15 days. Is that the point?
No, actually, I'm going to give you the rest of it. Yeah.
Okay.
What happens is first you have to find out how far in time you have to go out by the squaring method. So that's 15 days. Now to get the other part of the equation, so to speak, the price level where this one by one has to meet that 15-day vertical line, you would take 15.218 and you would add 1 to it. And so now what you want to do is get this square. You want to get 16.218 squared. You want to square it. So when you square 16.218, you get a value of 26303. Now this line right here that I'm showing you right here, that line is 26303. So when you move your GAN fan up this way, you're going to drop it right there because that's the correct way to do your GAN fan. And you can do that on TradingView because they have a little toggle thing that you can use all the time. So that's very important. I wanted everybody to be aware of that because when you drop GAN fans any which way, it's not going to be correctly giving you the information you need. And so let's go back to
great mentoring.
So let's go. I wanted to show you something regarding the use of astro trading methods using planet levels.
Okay.
See if I can get the right screen. Okay, need that. Okay. If you see over here in the lower left corner, this is a GAN fan that I placed on the chart off the top that we had. I think it was what
in September? The winter. Okay, yeah, the fall. All right. So that was a breakout.
Okay, and that was a breakout exactly. That's why I have the ellipse there when I posted that a few weeks ago. So you're right. These are resistance levels, and they become support levels. Look what happened here. It became a support level and bounced back up. Now we got into an area that a lot of people think is occultish. This is the best word to put it, which means hidden knowledge. Where some people will use the levels of the planets where they are currently, and they create what we call the Jupiter line, the Saturn line, the Pluto line. And when we convert the price of the ESs into a longitude number, we can track where the price is moving in relation to being near these planets. So if you can see here, back here in the rally stalled, there was almost a double top here, and it got resistance at the Pluto line. It dropped back down, dropped below the Jupiter line, which is a tradable line, by the way. Came all the way down, and when I wrote this, put this chart out a few weeks ago, I said ahead of time, if the ESs go to 2730, price will be exactly 180-degree opposition to the planet Uranus at 0 Taurus, and that's exactly what happened. It hit that level and bounced off of it. That's another tradable level. and then it took off. And when price goes back above the Jupiter line, it's a tradable level right here.
You know, someone also told me, and this is a great explanation, and, you know, I was short going into it, but it was such an ugly week, I gave that more heavier weighting and, you know, paid the price the week after. That was also a Bradley turning date. What's your view on Bradley stuff, the cytograph, etc.?
I've looked at Bradley. I have my own version of Bradley. It's called VMEMA, which stands, the VMEMA are abbreviations for the planet Venus, Mercury, and Mars. And I've done computations on that. It's based on the declination of the planets, not the longitude level. So it's a different story there.
My God, there are so many ways to skin a cat up in the heavens, isn't there?
Yes, and Bradley now here's the part that everybody should be aware of. Bradley was working great until the beginning of the year, and it was calling for a huge decline, I think, in February or January, which we started to get, but then it didn't go down any further. It bounced back up. And the same thing happened with my VMEMA. It called for a market top in September, and it started to go down, but then it stopped and went back up. So I don't know if the powers that be are manipulating the market so that it can stay afloat as long as it can or not. But yes, Bradley works well when I think there are no extra conditions going on in the market.
Okay, well, I know sometimes, you know, it might be projecting a high and the cycle inverts. Does the same thing happen with your work where you might be, you know, in advance thinking it might be a high and instead you get a cycle inversion and it turns out to be still a significant turning point, just not the expectation of it being a high and turns out to be a low, or the expectation of a low and it turns out to be a high?
It happens more in Bradley than it does with mine. Okay. And I wanted to go and keep moving here because I want to cover as much as I can for your students. When it comes to that particular question you had about inversion, Larry Pesavento wrote in one of his books, pay attention to when we have a solar total eclipse, because it could mean a major turning point in the market. For example, back on August 2021, we had the solar eclipse, so that's on my son's birthday. And I told him a year before that, I said, be careful, there's going to be a solar eclipse on your birthday. Let's see what the markets do. Now, Larry says the markets turn around dramatically if you're in an uptrend going into the eclipse, you're going to have a downturn, and it's vice versa. If it's in a downturn and you have an eclipse, it's going to turn up. But he also said, and this, I'll never forget what he said. He said, if the market does not turn down when the eclipse happens, you should see much higher prices. And if you remember, and I kind of find the chart, that's exactly what happened. The market took off like crazy. So he was correct with that approach to the market. McWhirter, there's a theory that following the north node, which is the level that the moon's ecliptic crosses the Earth's, there's a north node and a south node, and her theory was that when the north node leaves when the north node leaves the sign of Leo, the market will turn down, and the cycle will then, the economic cycle will move lower. And the north node actually left Leo basically in the fall of this year, and now it's going in a
fall of last year.
Yeah.
Okay.
And that implies that the economic cycle has topped out, and we're going to be in for probably 8 years of downturn economic cycle, because the completion of the North Node revolution is 18.5 to 19 years. So half of that number is 8 or 9 years. And let me just see here.
Okay, so basically from So we have 18 years up from the year 2000. We had a break.
Yes, that's exactly right.
Okay, so even though we had the dot-com bust, it was the beginning of an upcycle, and within that upcycle, we had the interruption of dot-com and then the housing crisis. So you could still, even within a larger degree idea, have major interruptions, right?
Yes, because she wrote in her book that you could have interruptions in the larger sequence, which I just described, based on aspects between the larger planets with each other, like Jupiter versus Saturn, Neptune, Uranus. So you're right. That's what happens with her theory, is that you have to tweak it a little bit. Okay. But I remember that I looked up her. Let me see if I can show you this here. Okay, this is a good example. I found this chart where the person had put together the events on the left-hand side and where the North Node was in relation to the signs. And if you go down to the crash of 29, it stayed in Taurus for the whole year. Now the North Node moves in a clockwise direction when all of the other planets, the Moon and the Sun, and all the planets move in a counterclockwise direction. So it's a weird situation. The North Node moves in the opposite direction. Let me show you a chart of it. But before I do, did you see when I mentioned the dot-com? You mentioned the dot-com bubble?
Yeah.
Go down to the bottom, the third one up from the bottom, the dot-com bubble.
I see it.
Left Leo and went into Cancer in March of 2000. That's what happened with our market in September of this year, because if you consider the ES's all-time high, it has not been exceeded as of yet, and so September remains the all-time high. But Leo, the North Node has left Leo earlier this year, so it's showing that the cycle is about to turn down. And let me just find you another chart I can show you on that.
So let me ask you, no matter what the study is, you know, you're getting a lot of macro ideas, which probably give you what, biases on what you should look for to fine-tune trading strategy or an investment theme. These things are background, and then you implement your work with your rivers, your proprietary system to give you entries, because they're just too macro to trade off of. You need maybe to dial in shorter term, Victor, to come up with a strategy, right?
Exactly, because this is all long term. So if you're a position player or you've got a 401k, you have to plan ahead.
How about this, Victor? Forex Gal's asking, why do you have a pyramid with number 33 at the top? Just wondering.
Good question. Well, there's a group of people that are students. I'm one of them, of Gary, the numbers guy. He's a numerologist. He happens to be on the east side of Cleveland. I'm on the west side, which is convenient. And so when we post on Twitter now, that's good. It's like our little logo. That means we're part of that group. So that's what's going on.
All right.
And
great how you met. Really, Twitter has been great for me in that way. All the people you meet through it, and then can develop relationships and collaborate with people. Really, it's been tremendous for me.
I agree with you, because one of the people that I met 4 or 5 years ago, he's a good friend of mine now.
Yeah.
His name is Spencer. He goes by Spencer. I met Spencer on the internet.
Yeah, he's your number one fan.
Yeah, I did a lot of work with him. He and I worked on screens together, and we developed a system together to track the market, which has been working out very well. So I have a lot of respect for him, because he's a great guy. And
Okay.
But I want to go. I want to continue on here. I don't know how much more time we have here, but
as much as
I
you want.
I wanted to tell you that there's been a big. There's always been a lot of questioning as to what Gann meant by the title of his book, "A Tunnel Through the Air," which I'm going to post right there, because it's written in code, and the code in there is the how he used the moon cycle to trade wheat and I believe corn and a company that sounded very much like General Motors. If you look at this cover, there's like a white tunnel going through across the screen.
It looks like a lot of planes from Boeing.
That's right, and also it's called foreshadowing because when I look at this now, I think of 9/11 with this plane down at the bottom hitting the World Trade Center. But that's not what I want to talk about. I want to say, okay, what did he mean by tunnel through the air? I haven't heard a good explanation of what he meant by that. Now, here's one explanation I'm going to give you that I made up. And as Gann would say, I don't want to talk about all of my secret methods because if I ever told you, you wouldn't believe, how I did it. So let's go to the next screen, which I have never seen this cover. You see the cover now? Now the cover has trading bars. See that? That's not on my original, not on my book that I have at home.
Or Ranko, but yeah, I see that.
Okay, so let's think about that tunnel through the air. Now we have bars in the tunnel. So the question is, well, how can we work this to our advantage or make use of it in our trading methods? So here we go. Here's the explanation. Because he used the word air, we're going to go to this right here.
Air signs.
Air signs.
Okay.
Aquarius, Gemini, and Libra are the three air signs.
Yeah, I'm a Gemini. I've been told I'm full of hot air.
Okay. All right. Now let's go.
All two. My twin too, man.
Yeah, your twin. Okay, and so let's go to Aquarius. Aquarius is January 20th to February 18th. Basically, you're going to see the signs start usually on the 20th or 23rd of each month. So Aquarius is starts on the January 20th. Gemini, your sign starts on May 21, goes to June 20.
Yeah.
Libra starts on September 23, goes to October 22. So you need to know these dates because of what I'm going to have your students do.
So are these lunar? Does it equate to the 28-day lunar cycle? These signs?
Actually, it's a whole lot different, and okay. What you're going to hear is totally outrageous.
Okay.
When you go back to those periods in time every year, take the highest high of the market and the lowest low in that time period. So, going back to this here, find out what the high in between the high was and the low was between January 20th, 18th. Then plot that, and then go to Gemini, May 21 and June 20, and get the high and the low for that period of time and plot that. And then go to Libra, September 22 to October 22, and plot that. Now draw lines, and I didn't have a chance to do it, but draw lines that link the tops of those three periods with each other, and draw lines that link the lows of those three periods with each other, and then draw a median line, kind of like a 50% line. And that's what I think he was talking about when he said the tunnel through the air. And what you'll see is that the tunnel actually moves very similar to what the market has done since September.
Interesting.
So that's just an interesting observation.
Yeah.
And one more, another thing, the Gann's 144, which I mentioned, I was going to talk about. This is the Gann's square of 12. He thought that the square of 12 was more important than the square of 9. they are related to each other, but the square of 12, if you multiply 12 by 12, you get the number 144. So in the very top right of the square, you see the number 144. And 144 he thought was very important in using when you look at daily bars, weekly bars, monthly. And it also, he was very big on space. So not only can you use it to track price, you can also use it to track time, and you can also use it to track space. What he means by space is if you take the major high and low, like the January high and the March low, that is a number that you can track on here and use this. And see if I can give you some more information on that.
Let me ask you this, Victor. With all these different things that you watch and that are giving you different types of market messages, you know, we just entered spring. Is there anything that is on your radar that we should track for a possible scenario in the market?
Yes. Let me get you that right now. Here's one right now. I wanted to talk about gold because, you know, Basel III is coming up March, what is it, 29th? Yeah.
Okay, I didn't even know. Okay.
Yeah, Basel III is going to be very important because the Bank of International Settlements has given central banks the ability to hold physical gold and treat it as money. Remember when Bernanke was asked in that famous quote, you know, is gold money? And he said no. Well, it's going to be money now because central banks have been loading up on gold for the last 3 years because they're going to treat it as a mark-to-market asset on their balance sheets.
Okay, so that's why the Chinese have been so aggressive, and I guess it's been Russia, China,
maybe
Iran, India. Okay,
yeah,
but none of the Western economies are doing that, are they?
I think they are, but I don't know. I have to see if I have that chart for you. But let me go and show you this one real quick.
Okay, yeah, go ahead.
This is the gold daily GLD daily chart, and this is from 2011. Remember the famous 2011 high, and then the 20 looks like 2015 or 16 low. I did a 50% line because you know I like 50%.
Right.
And the 50% line is coming in at 143 there on the left. So here's the deal. If these banks are going to stop artificially selling short gold contracts with impunity, which they have over 10 years, are they going to stop selling those contracts? And now are they going to just let it, you know, let the price float where it should? So I'm using this 50% line as a major line that if price goes above it, I'm a buyer.
Okay. Interesting.
So until if price doesn't go above it, I don't do anything if I want to. If I want to go long GLD. There's another chart. The Nifty 50 for my friends in India. There's a major double top coming up here. And if you look from the August 28th, 2018 high, which is the arrow here on the left, and the March 28th target date is exactly 144 bars. See that?
Yeah.
And there were, again, we talked about the mini triple tops. There are 3 triple tops here in the middle of the screen with the X's on them.
Yeah.
And there are multiple overlays of the 144. I found that the 144 actually can be used as trading days or as calendar days. Also, half of 144 is a usable number, which is 72. 0.618 is a usable number, which is 89. And I even used I've even used 1.618 as well. So what's interesting about this chart is that these dates, March 28th in the yellow arrow here and March 25 at the bottom, are very close to each other. So there's a major double top working, and Gann always said sell a double top. He also said sell a triple top. Now here's a triple bottom right here, the 3 yellow X's, and then the February 19th was the 3rd bottom. And the market took off on the upside. It also moved above the Uranus line, which is a buy signal, and it also moved above Mars. Let's see if I can get you one more here.
And that's Basel 3 coming up, Victor.
Basel 3 is very important. I don't know if people have been talking about it, but I think it's a big deal.
They haven't been.
And the other thing I want to mention is when you look, oh, here we go. I got the Basel 3 chart I wanted. Basel 3. Here's central bank gold reserves, Turkey, India, China, Russia, like you said. Yeah. Have you noticed that since 2015 and going forward, a lot of buying in physical gold?
Yeah.
Because they're going to be holding physical gold, as I said before, mark to market as a real asset that they can declare. So it would be in their best interest not to short sell the contracts. Don't you agree, Dale?
Yeah. And that's the whole thing Jim Sinclair was talking about, the what is it, the emancipation of gold from paper contracts, and that's why they opened that cash and carry gold exchange, I think, in Singapore, right, bro?
Yeah, that's right. Yeah. I know who Sinclair is. I've watched his videos. He's very good at it. And some of the projections that I've heard is that if gold were to be
50,000,
if gold were to be counter rated against outstanding debt, U.S. debt, or even outstanding world debt, the price of gold should run from anywhere, I've heard, from 25,000 to 50,000.
Yeah, that's.
Now, I'm not going to make that prediction, but yeah, that's amazing.
Yeah, well, Shakespeare said, "May you live in interesting times," and some of the things that you showed us, that McWhirter, is that the name of
McWhirter?
McWhirter. Yeah. Okay. Very intriguing material today, Victor. So
let me just real quickly finish with this. I know you got to go.
Okay. Go ahead.
A friend of mine, Edward Allen Topel, he was a trader on the Merc. He traded the minis, I think, or the full-size contracts, and I think he traded IBM. He's passed away. I think he passed away 5 years ago. He was a friend of mine because he belonged to a Sherlock Holmes group that I created in Chicago called the Criterion Bar Association. He was a big Sherlock Holmes fanatic. Okay. Well, he wrote this book, which everybody should get because, and I'm not pushing it because he's a friend of mine, but it makes common sense. Don't make any assumptions. Don't go by your gut feeling. The market will chew you up every time. And he wrote the book, and it's called Zen in the Markets. It's a short book. It's probably like 100 pages long. But he's telling you what he experienced as a trader and what he found that other traders did wrong in assuming directions of the market that totally, shot him out of the business. So I wanted to tell you, there's my homage to Edward Topel in Chicago.
Thank you so much, Victor. And everyone that is hearing our voices now or watches a video later, you could follow Victor on Twitter at Victor Zubarev. Any other contact information? Victor also does teach this very interesting esoteric type of work. If you're interested to contact him, any other contact spot, Victor, besides your Twitter handle?
Well, I found the best is the direct message via the Twitter handle. I respond right away, and then we can move on with discussions. I usually hold a private interview with everyone with me on video chat, like Skype or some other method. So I get to know the people quite well, and they get to know me.
Victor, thank you so much, my trading warrior brother.
Thank you, Coach, for having me.
Yeah, may pips rain down on you and all the people whose words are touched by your ideas, and really enjoyed this again, Victor. We'll get back together in the summer and see how this node, which I'm glad it's a lunar node and not a node in anyone's throat or neck. So, really.
Yeah. Well, I appreciate you having me on, Dale. And as you know, I call you Coach for the reasons if someone watches the previous video, they'll understand why.
Yeah, and I've been using it, and people have been calling it, and you know what? Things have even been better.
That's very nice to hear. I'm glad.
Yeah. So thank you so much, Victor.
Thank you.
Have a great week and keep in touch, all right? Everyone, Victor Zubarev at Victor Zubarev. Adios. And remember, that's our wrap. I'll see everyone for Turnaround Tuesday tomorrow. Good hunting the rest of the day. And most of all, don't just count your pips, count your blessings. And I'll see everyone tomorrow. You're very welcome. Adios.